Bring in Gina Sanchez. She's the chief market strategist for Lido Advisors and a CNBC contributor. Gina, inflation was the #1 issue in yesterday's midterm elections. So did the outcome that we saw get us any closer to solving the problem?
Probably not. If anything, the outcome is going to ensure that we don't have much, we won't be able to get much done.
Yeah, I mean, we're going to have gridlock in Washington. We're expecting that the Republicans are going to come up with some ideas if they do take the House. But ultimately, what do you see coming out of Washington? Is this a battle for the Congress to win, or is this a battle for the Fed to win?
You know, the problem is that Congress theoretically, if they did anything, would probably add to inflation, which is
That's
additional
the question,
spending.
isn't it? If they did anything.
If they do anything. So in some ways, the Congress not doing anything might be the best thing right now. Now, whether or not the Fed can win this battle is another big question, because these are supply issues. They're not demand issues. The Fed's doing a pretty good job of killing demand, and yet we're probably going to see a print that hangs out just below 8% tomorrow. And that's not going to be great news for the market.
So what do you think the market reaction is going to be if you say just below 8% on the CPI tomorrow? Wall Street's going to be watching that closely. Where does the market go when we see that print?
So, look, the market is really hoping that the Fed can get just enough rationalization for a pivot. They want a 50 basis point cut in December instead of 75. If we see CPI at 7.9% and core CPI at 6.5%, that's still pretty stable from where we are, which is to say that the Fed isn't making any progress.
What about gas prices, though? I mean, we've seen some moderation there, maybe. I mean, are there some green shoots that you can look at and say, you know what, there's some indications that there might be a corner to turn somewhere out there?
Yes, you're absolutely right. Gas prices are actually at Ukraine invasion prices. So you would assume that would be great. However, we are still running some food shortages. We're running labor shortages in the labor market. The Great Resignation was a very real thing. Average 55 and up participation is really low, while the average worker age 25 to 55. Those folks have all come back to the market. We're at pre-pandemic levels in terms of labor participation. There just aren't enough bodies. And so that's really what's driving inflation right now.
And that means wages have to go up, right?
A shortage of food. Wages have to go up.
Yeah. So what about crypto? I mean, we began the show this evening talking about this spectacular mess that we saw in the crypto space today with FTX and Binance. But the history of crypto has been that the supporters of the asset class say, look, ultimately, this thing is a hedge against inflation. But that hasn't worked this year. Is it going to work? Was that a myth all along? What's your take?
That was always a myth. If anything, because this remains a very unregulated asset class, you need to have a pretty, you need to have a pretty good stomach for risk. And in order to have that, you really need to have a lot of excess liquidity in the system. And that's the one thing that is going away. If liquidity goes away, crypto goes with it. So
crypto, where do you think it goes from here?
I think crypto still has another leg down. We still, if you have a terminal rate of if you have a terminal rate of 4.75% or 5% and no cutting after that, meaning that rates normalize at those higher rates, then there's really not a lot of room for crypto. And again, getting back to the frozen Congress, if Congress is deadlocked, there's going to be no excess liquidity either running in the fiscal world. Gina.